Oh, I'm going to do that. That's interesting. And let's do... Okay, to get started, good morning. This is Simon with ToughTrader.com and Trading Perform Coaching. Past performance is not indicative of future results. Trading derivatives has substantial risk associated with it. Make sure you can afford to lose money if you are trading. Not all trades are profitable. Past performance not indicative of future results. That being said, you must be consistent in order to be able to make money. And lastly, let's see if there's anything else on there. This is for educational purposes only. I'm sharing my trade plan with you in hopes it'll make you a better trader. So let's get the first piece of business off the table, which is this is my first day back, right? I posted this on the stream. If you are following me, right, I may or may not be on today. I was on last night. I traded last night, but sometimes you're rusty on your first day back from vacation, right? And the reason for that is pretty simple. And I know this from coaching other people. You get relaxed, you're feeling confident, and that opens you up to making mistakes. I reviewed thoroughly before I came in today. Pretty sure I'm prepared. I had a good night in Asia last night. But as always, don't follow me blindly, right? Also, I'll be starting to trade the bond in the room. This week is paper trading only. Every trade that I point out will only be on paper. Why? I haven't traded bonds in about 3 or 4 months at least. And I have confirmation that the algo is working properly. Now I need to actually see if I can execute properly in real time with the stops that I want to use, which is approximately 6 to 8 ticks, right, per trade, and make sure that I can get my 2-to-1 RR, which the algo has been showing me that I do have the ability to get. So at any rate, I'll be pointing out the trades in real time. Also, I have 2 CR charts, and I couldn't get one CR chart to update properly. So we're operating off the CR chart I usually use is just my own private backup, and I don't have it set up the way I normally would have my other charts set up. So there'll be a little bit of fumbling today, getting everything going properly. So first of all, let's talk about ES. It's rallying pretty hard this morning. And not surprising either. The perception, I'll give you, this is off of Business Insider. Top story on Business Insider this morning. Clear risk of contagion. European markets drop as Turkey lira crisis spreads around the world. Okay, well, here's the deal. The shorts are getting smoked this morning, okay? And anybody who's trying to short or wants to short is just getting annihilated. Why join that side of the trade when it's so hard, right? It just grinds and grinds and grinds to the upside against you, and it becomes very hard. I have no issue with shorting. I just think it's the harder trade. That's all. So a couple of things. Let's look at where we're at on the bigger picture and then jump from there. So let me see if I can. And again, I apologize for no camera, but on this screen, the camera's attached to the other computer, basically. So let's look at ESTPO day and night. Let's make sure I have the settings correct on this chart. 30, 15, 14, days, minutes, seconds. Okay, we're good there. Okay, so obviously we're trading at 28.3650 this morning. And the first thing that I'm interested in, I'm going to give you a step-by-step of what I'm looking for. First of all, we're inside of Friday's value area, and Friday's value area was relatively flat. See how there's no particular topographical feature that makes me go, oh, the point of control really stands out. So what that tells me is that this area is particularly easy to trade through, okay? That being said, even within there, when we open up within range, this is the type of price action that I expect inside the range. That would also go, right? So knowing that is important, right? Why is that important? Because if I expect the market to open up, first of all, if I expect the market to open up, and I'm thinking, oh, we're going to open here and go straight up, and I'm inside a value, and this is usually the PA I get, I may end up being up 2 or 3 points on the trade, thinking, I've got open drive higher, and then it comes back and switches back on me and comes back and tags me out for my stop. That sucks, right? So you have to know the odds of this kind of trade working, you have to get above the value area, okay? Inside the value area, I expect this. It doesn't mean that's what we get. It just means that's what I'm looking for, right? Outside of the value area, I know it's more likely to drive in one direction or another. It helps me set up my thinking for the trade and how I want to scale. So with that being said, the first thing I'm going to ask today is, can we get above Friday's value area high? That's where every bear is super trapped. That's value area low, value area high. I don't have the numbers on this chart. Again, I'm going to have to fix that. But that's approximately 28.32 is value area low, 28.40 is value area high. So I have a checklist. Are we above value area high if I'm looking for a trend? Are we below value area low if I'm looking for a trend down? If you don't get below either one of those, right, life becomes really hard. Look at how that was treated overnight in Asia. I want to show you that. So that 28.32. $28.32 becomes that pink line right there. Okay. So last night, this is where I was long, 28, 25, 50, right when we hit the top of this line. This is where I exited that trade. My goal was to get to the volume point of control. It never made it there. I had a little trailer on it, never made it, exited out. That's 1 and 2 points. I put that out on Slack on that trade. Evan was the only one in the room last night, I think. Okay, if you'll look at each of the support areas. So look how this got treated. We open up in Asia. We drive down. They attempt to hold the 28.32. We impulse move below. We backside test that 28.32. It's early Asia, so it's easy to squeeze people out. We do one quick squeeze above, get back below, and now we start the trend to the downside, getting counter rotations at support. Notice that my next trade that would have set up, even if I sat here all night through Asia, I would have shorted this. I would have shorted just like I got right here. Had we been able to make it back to VWAP, we didn't make it back to VWAP. I was long off the first support level. My next long would have come right here at approximately 28, 22.50 with a 2-point stop. I don't know if that would have gotten stopped. It would have been it'd have been approximately 20.50, and that looks like it would have been really close. But again, that was midnight right in front of Asia. And my first long or green bar actually would have been here. So I might have actually gotten in a little bit lower at 28.22. But either way, that would have been my long area off of Asia. Notice we come all the way back up to test value area low from Friday and reject right off of it, right? First test back into VWAP, rejection for 1 or 2 points. Again, pre-European market, right in front of European market, value area low. If you don't think the computers and the traders are looking for this, they are. Okay, and notice you get big extensions off of that. And then this morning, right, notice that we finally impulse moved above value area low. We backside tested, held, and we've pushed right up into resistance at 28.36 to 28.38. The market has been pretty mechanical. More importantly, if you got emotional underneath value area low, was it good for a trade? It was. Did it mean the end of the world? It didn't. And the reason why when I'm not throwing my mouse around, it's a good way to start off the day. Let's see if I can find, there we go, the ball. Okay, the reason why that's important, okay, so the reason why that's important is you could have been bearish all night last night. If you look for good location, right, you could have gotten good trades. But if once we were down, right, this is putting us down. First of all, in Asia, when you're down 10 points, that's a lot in Asia. To start with, why can't I move this screen? I don't know why. Still can't move this. Okay, well, I'll figure that out later. This is down approximately, let me memory serve. We were up 28.37, so 28.20 is 17 points, right? When you're down 20 points, 15 points, 16 points, and you're getting bearish down here and you buy the hype about the bear, which is why I wrote on the on the Slack stream to the members last night, right? And I'm going to show you exactly what I wrote, okay, because it's still my attitude. there, which is let's see where I write this. Okay, one. Let's see. Okay, rule of thumb. Even in down markets during RTH, longs are easier and more rewarding than shorts. And I don't care about the bears BS until I see some actual damage, like maybe a down week or break below the last swing low on a 4-hour chart. I just don't believe the hype, which, if you missed it, is that Turkey and world currency melt and strong dollar will be the end of us all. Okay, just show me first that we can go down for more than a day or two. The reason why I say that, okay, is exactly for this reason of what's happened this morning. People are looking for a good place to short, and there are good places to short on counter rotations back up, but you have to be nimble. If this is turning into, wow, this is just really jacked. Hold on a sec. There we go. If you are turning this into, I apologize, guys. That's just not working the way it usually does. There we go. If you're turning this short into anything more than a scalp and you're thinking, oh, we're going to zero, you will find yourself getting continuously crunched. So going back to the chart for today. Okay, we got to get above 28.40. I realize we're just opening and I'm running behind. Just bear with me. I'm not trading the first half hour anyways. Although, as Bill points out, a lot of very good setups that come in the first hour. I don't particularly care. Okay, so we're pushing into Friday's TPO point of control and volume point of control. We got to get above 28.40 to trend. The obvious target above, okay, is this hole in the profile right here. Okay, we already rejected off of the value area low from Thursday. So let's erase that. This is the obvious target, which puts you at 28.44 to 28.47, which is 10 points up from where we are right now. It's a clean target and a good place for rejection. Above that, the obvious target becomes the open settle price at 28.50 to the TPO volume point of control and the TPO point of control. And then finally, if it really gets strong, to the single prints at 28.52. After that 28.50.52, which is the next logical location, there's a small little point here at J, but I'm going with the, you just want to make sure if you trade this to check to make sure you actually have an entry from the algo or from a delta setup. We could come up and test this J period right up at 28.48, but this should give you the rejection, right? You just have to be aware that J period, there was a small anomaly there. Okay, above, untested. So I'm just giving you each point as I go along to do the charts. Again, the charts aren't all that special. It's how you use them that makes the difference, right? There's the settle price that's untested, open gap. Every retail trader in the world looks for it and thinks there's something special. Notice there's no volume. There's not a significant volume build there. So it would just be locals trading that. Okay, untested value area low at approximately 28.57. Again, I'll stretch that out to give you the exact number. 28.57, let's call it. Untested value area low, which will often act as resistance. And then the obvious target, which is 28.58.75. Let's just call it to 28.60, right? And then untested value area high at 28.61.50, let's call it. Okay, so those are the upper areas. Realistically, we're trading at 28.36. It'd be hard to see us stretching anything past 28.56. Would be 20 up, right? Which would make that 28.57 a logical place to get rejection, and or the open gap would be a stretch. So you'd expect the retail traders to be able to get a turn down. Let's talk about the other side of the equation. So remember, this area would be relatively easy to trade through, right? And so the obvious side of the equation actually comes down here at the unsettled, untested in the RTH. This is where I was taking my long last night. 28.25.50 to 28.25, followed by 28.22. Okay, the chart is actually not repaired here. So 28.22 to 28.23 I took was the next logical location. I believe that's where Globex Slow came in, but I may be wrong about that. Let me look. Maybe it was 28.20. They overshot it a little bit, I think. 28.20.50, but that's generally the right location. Okay, there's a glaring hole in the profile that everyone and their brother is calling support. I had 3 people, 2 of whom are pretty inexperienced traders, and one who's a very experienced trader, and they're all looking for 28.19 to 28.17 as support. Okay, sure. There's a big hole in the profile. It makes sense. We couldn't get to it last night. It got responsive buyers before it got there. So everyone and their brother was looking for it and ended up getting front run by a tick or two, right? I thought this anomaly was better than the hole in the profile, but this is logical, followed by this hole right here, 28, let's call it 12 to 14, right? And then followed finally, see how this is all flat through here? Would be really easy to trade through. There is a little tiny hole, but not much volume build around it at 2804, 2805. And then this chart is hypothetically repaired at 2801, and 2800 is the round psychological number. And that would put you down 37 points. I doubt that we get there, but that would be the end of the line. And then last week's swing low, or this month's swing low, I think that was last week's swing low, maybe the week before, but 27.95 is a swing low. You want to look for traps at 27.95. And then let's see what last week's swing low was. Was that Friday's? Yeah, I stand corrected. And then look for traps at 28.26, which, by the way, I mentioned last night. And if you look how they treated that 28.26 on the chart, if you look how they treated that 28.26, if we, wow, this sucks. I don't want to, oh, you know what? I can't erase all the lines on this chart because they'll say. So if you look at 28.26, which is basically right here. Okay, we'll color it red. Look how they treated it all last night. Okay, so I was long right here, right underneath, right? And what did I say I was looking for? I would like the trap back in, right? And the push. So look at if you were working that concept all night. Trap back in, failed, but small loss, right? Attempted trap back in, failed, didn't break the swing low that time, and pushed all the way to 28.32, right? They come back in. Again, you'll see that initially we hit that 28.26. They responded back up. And then you can see finally at 5 a.m., we hit the impulse move again. Again, they test 28.26. They get the push above, and that's what drives you to 28.38. Traders and computers will be looking at that 28.26 for traps. So notice I didn't get long at 28.26. Okay, so this is an important distinction. Notice I didn't look at 28.26 and go, oh, that's my long location. I looked at the anomaly below and said, that's my long location. And now I hope that we trap back above, right? I'm going to work the anomalies and the trade location. So had I been up at the dark hours, right, I would have come back in here and said, okay, well, let's see what's in here that will help me out. First of all, this is my last star push to the downside. I would have liked a push down. My biggest delta on the way down was a negative 716. I know I had to get above this to break out. Okay, so I want to show you that again. Again, the biggest delta coming in just below that weekly trap, right? So see how we try to trap above almost immediately. Again, this is where I was in and out. It was Asia. I don't look for anything special. This is where I was in. I was out already right here, right? But look how that got treated, that 716. So this is important, and it goes off in slow motion in Asia and in early Europe. And so it's easy to teach because it goes off fast and it gets a lot of noise during the US session, which makes it hard to trade. So if you can understand it in the slow session, you can get a better grip of what you have to do during the US session and not get hung out. So look how we roll down, right? Notice that this is the first, I'm going to guess that the point of control never closed above on this bar right here, and I'm going to bet that the point of control did close above here. Again, I'm a little off because my computers are not, I don't have this one set up like I have the other computer set up. I'll have it fixed. The data is just not correct on the profile there, and I had to figure out how to fix it. It's from a different data feed, and I'll have to figure out how to get the data filled in. Okay, so my guess is the point of control closed above this time versus it didn't close above, again, the 716 the first time, right? And now you see the immediate short squeeze that comes above. Notice the backside test back into that 716, gets a responsive buy and a trade back up. Notice that they tried to press below that 716. Look at all the deltas are positive. Almost all the deltas are positive and no big deltas underneath that 716. trap back above one more time, backside test one more time. Again, notice no bigger delta all the way through here. And then we finally push, and now we get the bigger delta right there at 842. That becomes your big number, right? If you look over here, and it's not a very big number, but it is the big number. I'm talking about this bar right here. Oops, wrong thing. There we go. This bar right here, 842. We close above it. We backside test it. They try to push. Notice that you really can't close underneath. I know you got this one little bar, but it was pre-market. You really didn't get a big delta close underneath 842. Now they're squeezing, and now notice that same bar, right, is going to get a backside test unless we've printed a bigger delta. We printed a bigger one now. It's this 1075. We jumped over here. Let me do this. Now we've jumped. This bar is now our big number right here. So what I would say is, in order to get a roll down, you're going to have to close with a point of control underneath 2836 to get the roll to the downside. And the logical target is what? 2832. There's an anomaly right there that should is that right? Yeah, there's an anomaly right there at 2831, 2830 plus 24-hour VWAP, and then 2826 with that 2825 as the backup. I'd shoot for the 2825 versus the 2826, but it's all semantics, right? And delta's gone positive, right? I would look for if delta turns negative and we get below VWAP, look for a roll back to the downside. I expect for the day two-sided trading, and it's Monday, right? So everyone comes in all hyped up thinking, oh, look at the overnight. It's going to be a big trade, right? Well, a lot of times what we end up happening is the entire move was stolen out overnight. We go right into summertime slow grind trading like it was the rest of like it was all this period of time, last week, and people get disappointed, or they put on trades thinking I've got a 10-point or 15-point trade here, and you end up with just absolutely zilch. Here, let me get this all the way over. You end up with absolutely zilch off that trade. So notice they're trying to close underneath this 1057. See how they can't? That's the first test for the bears. If you get underneath this 1057 and you want to be short, I wouldn't use the swing high as a short. I'd want to see the impulse move or the close underneath this guy right here, and then the backside test, and I'd have my stop 2 or 3 ticks behind the top of this bar. So 28, 37, 75. I'd rather use that stop, right? I'd rather use a stop 2 or 3 ticks above 28, 37, 50 than use the 28, 41, right, and enter 2 times. But your true stop is 1 point above the swing high. I would just rather use this bar as my entry and exit for the push to the downside. The reality is, if we close underneath 1057 being the first half hour, they'll just flush it down to VWAP into the 2832, 2829, 2830 area, and then we'll see whether the bears have any ability to do anything whatsoever. But they've been totally impotent for the last 3 years. I don't expect any follow through from them at all. So that's my 2 cents. And when we look at, and so I want to do one other thing. When we look at the bigger picture, right, I always talk about this, and it's important. Okay. Perspective and what you're looking for, right? Look at the chart. Okay. You look at that chart right there. That's only going back to March of this year, right? What's bearish about it? Here's your major swing down here at 2690, right? We're nowhere close to breaking that. Even if you wanted to say your recent swing low is still below 2800. Getting bearish before that breaks, that 2800, okay, you are asking for a world of hurt. Now, when I say that, yes, can you look at the screen and say, I could have made shorts here, I could have done shorts here. But in my history of coaching retail traders, which now goes back to 2014, I think was the first year I coached retail traders, not professionals, okay? What looks like an easy short often ends up in losses, okay, stops, okay, and getting run over, and you have to attempt it 2, 3, 4 times before finally getting it right. And then what happens is you've gotten so beat up from trying to enter those shorts and manage those shorts for big swings, because most of them come back and snap you, okay, that you end up down in the hole, and you need that big swing to cover your losses from trades. Now, what happens to my long traders? Even if they're sloppy long traders, right? And they put in a reasonable stop. They get lucky because the market, which is a bull market, bails them out. Okay, not only does it bail them out, but occasionally if they're patient, they just catch that grind that keeps driving them up and it never comes back for their stops. Versus with shorts, you constantly get what we had overnight, which is some guy thinks, oh, we're going to 2,800. Or I heard, like I said, several people said 2,817. And they say, I'm sitting patiently for my target. And then it comes all the way back against them, stops them. And then would it be a shock to see 2,817 this afternoon? Nope, it wouldn't be. But for most of those retail shorts, they've gotten stopped out on that trade, right? Versus the guy who said, hey, I'm buying 28.22 with a 5-point stop, and I'm just going to sit there. And he gets lucky and ends up with a 15-point extension or a 20-point extension. Okay, so that's my first thought. Second thought is, okay, as I open this up, notice that we held Friday off. Notice when we were up here on Thursday, right, that there was 2 points that were important, and they were both TPO points of control. Notice the volume points of control all got covered up. So there is an argument to be had that if we get below 28.25 and hold underneath 28.25, which is where this last TPO point of control that has not been tested, this is still naked during the RTH. Notice that there is no, see how there is no, so I'm giving the bear side of the argument now, right? See how there's no naked TPO or volume point of control below. You could make the argument that we could make it to 27.80 before finding significant support. I'll give you an example of that, okay? So see when we were up here, when we're trading up here and you looked, and once we covered this up, see how you could say, hey, there's no naked point of control all the way down to 27.50. We were trading all the way up at 2,800, right? Notice that in order to make it to the 27.50, it took, from the time you noticed that, which would have been on this day where I would have said starting 6:13, hey, there's no TPOs or points of control underneath that haven't been, that are naked, right? But if you'll notice and you look down, how many days did it take to get to the 27.50? From this day, it took 1, 2, 3, 4 days to test the 27.50. Notice from the short side that on all these days rolling down, that at each day we closed at the mid or at the high of the day. Notice here's the first day, we closed at the mid. Second day, we closed near the high. Third day, we closed near the high. Fourth day, and the reversal day, we finally tagged the 27.50 and we closed at the high. Notice that you could have initiated a short position on every one of those days, being correct that the market was going lower and gotten stomped on the short side. And I know this, why? Because I was short on some of these days, and I just couldn't get the roll down during the RTH. The entire move came during the European session. What does this tell you? If you'll go back and look at the headlines from 6:14, 15, and 18, again, I'm not trading the first half hour, so anyone's looking for a trend day up or whatever you have to trade, you should knock it out of the park. I'm not trading the first half hour. I'm just going to let it do what it's got to do. Okay, and I'm going to cover bonds in just a second. Okay, so what's the lesson here? If you'll look, you would have noticed all kinds of negative headlines with regards to tariffs, European economy, you name it, blah, 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 blah. Okay, every single day, close back on high, close back on high, close back on high, right? Really got old really quickly trying to short it. And if you look afterwards, this would have been my secondary target, this 28.37 to 28.39, right? So look how long. Wow, this is really frustrating. Notice that we finally get, where were we? Dun, 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 dun. We finally get there, right? And then we finally pierced an open drive underneath it. Notice that once we get underneath that TPO point of control, that backside test of that area, see how it got swept, became resistance. See how we rejected right underneath it the next day? Because why? Traders bought there and they needed an exit once they got trapped there. And then we come down to the next TPO point of control in general, not to the T, but in general, and it generates the reversal location. And where does it come back up to? To test the naked points of control. And then eventually we come down to the 26.90. Big traders are looking for those naked points of control to position themselves. And you know they're doing that. Why? Because it's not retail traders who are stopping the market dead in its tracks. It's institutional guys. And institutional guys are going, thank you for giving me the exit out of here. Because what these guys were thinking here was that I've got them, and they're looking for these pushes out from these locations like this. And they get them most of the time, and they're just managing risk. When they get smoked, they're going to stop it back out on the backside of the trade and try again on the next setup. And if you'll notice, they manage risk efficiently and position correctly, they get a lot of paydays out of those locations, right? So all that being said, the odds are everyone got too bearish. Bonds had a nice rally. They're probably backing back off. And I'm waiting for the algo to trigger me in, or for me to get the biggest delta of the day and get underneath. And you'll notice, by the way, okay, coming back over here, notice how we came back to test the 1057, couldn't close underneath it, drive back up to 2840. Had that been outside the first half hour, that's a normal trade for me. You'll also notice deltas are getting really small, and that's indicative. Volume's really, really low. We are at approximately 50% of the volume we did the same time last year right now. 50% of that. That means that deltas will get generally smaller, and big deltas, when they appear, by the way, this will be your biggest delta of the day if it prints, have more influence over the market. You're hunting the biggest deltas of the day, which, by the way, my algo that tells me where the biggest delta is down, I have to figure out what's going on with it, which I will here in a couple minutes. And I'll get that found, right? So for right now, if this ends up printing, we will move from this algo, from this delta. If this ends up printing a big delta, we'll move over here. If this doesn't print, this is still the king for the day, or queen, as your flavor may be, of the day. And this is how you have to get underneath in order to make it to roll to the downside, or we need this bigger delta here to print. Also notice delta's improving, right? Delta's still not positive 9,000. Where I would be particularly interested in being bearish would be getting underneath VWAP and seeing delta actually flip to the negative for the day. That might give me more boldness. I'm looking for counter rallies to short back to the downside. But right now, this is trend up, even on the smallest range possible. This is a six tick bars is what we're looking at. We're making higher highs and higher lows ever since 2 a.m., right? There's the low in Asia. There's the low in Europe. And we've been making higher highs and higher lows. So I'd want to see, in addition to getting below this biggest delta, maybe an impulse move below my last swing low, which would be, depending on how you want to measure it, 28.36 to 28.34, probably more like 28.32. I'd want to see if I can get underneath value area low, backside test, and then possibly catch a roll to the downside. That would be my bearish argument. If I had one, again, I don't particularly care for or care about the bear side of the argument. Just doesn't interest me very much. I'm sure there's great arguments for why the market can be a bear market. It's just not for me until I see some damage. And once the damage occurs, I've traded for 20 years. Okay. And what I know about bear markets is after you get the first big break, that's where the easy woohoo 10 points, 15 points in 10 minutes comes from, not before. Before you get the break, the 10 and 15 points come, but you have to be perfection on the entry. You have to have the patience of a saint, and you have to know when you're not going to get run over, which is the really hard part about it. After it breaks, the downside is actually pretty assured. Not assured like, oh, it's guaranteed, but if you take the shot at it 10 times after the break, 7 times pay you when you get a good short setup. The same setups, but prior to the break, and your win rate's closer to 50% or 40% for the bigger trades. And most of the time, you're going to end up saying, I should have taken my 2 or 3 points and gotten out of here. And it creates a huge mental stress for most traders, because you end up being in this block of, oh, I should have held, oh, I should have covered, right? So for me, the easier way to resolve that issue is take short. If I take shorts, I scale, I move stops down, and if it gets lucky, okay, shoulder shrug, that's great. But I'm really looking for the longs. And again, until we break, if you can get positioned, right? If you can get positioned on dips down, and you can do the exact same process. I'm going to scale and leave my trailer. Think about a guy who took a long here, or took a long here, or gal who took a long here, or took a long here, or took a long here, and said, hey, I'm scaling and either leaving my stop as is or moving it to break even, right? And they end up with huge grinds to the upside, okay? And that makes perfect sense. So we are testing that value area high. That's a logic. Notice, look how the market treated the value area high. Why is that important? See how we were doing it pretty much to the tick and rolling off? Tells you that locals are in charge. This is the first half hour. Notice the lack of counter rotation and counter volatility in the market. Also important. Why? Because if you are trading, okay, and you need 2 points, right? If you shorted perfectly here at 28.40, your first scale came at 28.38, then you got 28.36. That's 4 points off that 28.40. It's a great trade. It's a good trade, right? Nothing's wrong with it. But now notice that we've churned and that there's no big counter rotation. We're going 28.40, 28.38, 2 points. You need perfection here to make them your money. And then the other thing I'd be doing here, just to make it easy on myself, I'd be doing this. Okay, I'd like a break of that line, right? That 28.38. I'd like a break of that line in order to have my trade work for me, right? So that's the end of that. That's the end of that 2 cents. So what I'm looking for is delta to go negative, below VWAP, below value area, certainly below value area high, but preferably below value area low, and holding underneath value area low for me to think, oh, we could get an extension to the downside here, right? I like to see rotation open up, right? Otherwise, I'm going to expect slow and grindy, and I'm going to go hunt my biggest delta, which, by the way, is now shifted to that guy right there. So this guy no longer counts, although his memory will be left, right? So you still got to break him or her. But this is the new king or queen of the market, and so I would say at minimum I'd want to be below 28.39. And again, and then I'd also want to see a break of that trend line. Remember, I'm not the only genius that can draw that trend line. Someone else will be looking. It's right into the anomaly. You can bet that when we get here, they will try to get a responsive buy. And what I'd probably want to see is this tested and then come back for a backside test at 11.49 for a roll to the downside. I want to see this test the first time. My guess is, since it's slow and grindy, that it'll be held the first time through. And my assumption is trend day up. All of that is added up to one simple thing. Because I wasn't bearish this morning, I'm not getting run over for 4 or 5 or 6 points or whatever anyone thinks is, oh, inventory is long, so we must be coming to shake out the inventory right out of the gate. That's a 50-50 proposition at best, right? And as a matter of fact, what Dalton would probably argue is the fact that we haven't shaken inventory in the first 30 minutes to an hour would be an indication that the market's actually particularly strong on this particular day. Ron, can you back me on that? Is that correct? I know you're my resident TPO expert, but I believe that's correct. Is that what he would argue is the fact that we did not shake long inventory overnight would be an argument that you have a better and stronger chance for a push to the upside. So anyways, that's my 2 cents this morning. I'm going to cover bonds now for a minute. Again, I'm just now introducing bonds into the room. And one other point. Asia is freaking awesome. If you're not finding a way to trade it, okay, for 1 or 2 points, it will pad your account. It's boring as hell. I know it sucks to spend your evening staring at 1, 2 ticks at a time and then all of a sudden just get 2 ticks. And the thing that I hear the feedback from Asia is, well, if I make a mistake, I don't have a chance to recover it. That's true. If you make a mistake, you should take your stop and walk away for the night. You won't have a chance to recover it. But if you'll discipline yourself to take it at location, right? And you will let it work itself out the gross majority of the time. It's a straightforward 1 to 4 point trade, and I'm usually taking 1 and 2 points. And I'm using that cushion, okay, to roll in and work and help me during the RTH. But you can make an entire career off of taking 1 and 2 points out of the Asian session. It works like clockwork. I had no issues with it last night. It was straightforward. It wasn't pleasant taking it into the hole, but it never is, right? I just know in Asia, they're always going to make it look like they're going to break it. And sometimes they do. The majority of the time they don't. And then they get sellers trapped or buyers trapped at those key locations, and then they roll it down. Like I said, if I wasn't totally addicted to this business, I'd probably only trade Asia and spend the rest of the day hanging out with my kids. But I don't know what that says about me. But at any rate, this is how I do things, and that's that. So let's jump over to bonds really fast. Hold on a second. Okay, bonds. Let's get this done. Where is the, hold on 1 second. There it is. Okay. I'm not going to explain what the triggers are on the bonds right now. It's just too long a conversation, but there's 2 triggers. Okay. I'm looking for, again, the data was a little bit slow hooked up here. So this is the 30-year note that we're looking at. So first of all, this is just same as ES, right? I'm looking for delta pushes up or delta pushes down. And remember, this is a momentum trade, right? So notice how often the touches of VWAP, right, when we're trading one way or the other, give you a particular trade or counter rotation or rotation trade. And again, I'm missing my data from the whole week on this computer. So notice the touches of VWAP are great places when you're momentum trading this thing to get location. As a matter of fact, what's easy way to do it, one way is just to wait for your first down bar. This is a 4 30-second bar, right? And notice that it almost always gives you, when it's trending, a beautiful trade. You just have to wait for the first lead in bar. That obviously doesn't always work, or that's what everyone would trade. But if you can detect trend, it really, really helps, right? What I'm keying off of here is my trigger. This is a momentum trigger for me. And basically, without going into great depth about what's triggering these bars, when I get my first blue bar in a series, and there's a long pause in between. So let me show you. It would look like, let me do something really quick here. There we go. Okay. So again, like in this bar right here at whatever this was on the 9th, when I get this bar right here, my entries that close of this bar, I know you can't see that very well, so I'll spread it out. So this is back on the 9th. My entry would be literally the close of this bar. My stop would be actually a little bit lower than this. So that's 31 30-second. So that's 4 ticks. I'm probably going to use that 6 ticks as my stop. And then the goal is to let it stretch, right? And let it push and either let it stop me or let it pay me to the upside. Again, if there's at least 3 bars in between the last trigger and the next trigger, I will take the subsequent trigger, assuming I'm not already long or short from that particular trade. Again, you can see my entry here would have been this 28, would have been 143, 29, 30 seconds. My stop, right, would have been, if I take away 6 ticks, would have been 23, 30 seconds. That'd be 6 ticks. And you can see that that would have resulted in a beautiful trade. Again, even if I'd gotten stopped here, again, I take the first bar after 4 bars where there's a trigger, and you can see right now I just have no trigger conditions one way or the other. I can go a long period of time on the bonds without a trigger, okay? But when they pay, you can see when the triggers do fire, like if you just look at from the last sequence, this one triggered. So I probably wouldn't have been here for this. I probably would have taken this, and you can see your trigger on this would have been 144, 30 seconds, right? So 144 even. You can see we pushed all the way, even within that same day, all the way up to 22, 30 seconds. That's 22, 30 seconds. I think it's 32.50 a tick. It's a monster trade, right? That's a really good trade, and it took almost no heat. I'm not going to explain my series of triggers there. I worked for a long time. John also helped develop this algo. He worked for a long time, and he asked me not to give to fully disclose what the trigger is, and I'm not going to fully disclose what the trigger is out of respect for him. But it's very valuable. I have the same trigger series going off in ES. It's a momentum indicator. This just happens to be a momentum instrument. And then if you're like someone like Peter who has a better idea of where he when these were triggering, Peter was long the bonds already. And so when these align with, and Peter's been trading the bond for 20 some odd years, he knows what he's doing there. So when these align with his view, which he's been generous to share, my goal is to put on size on these trades, right? Both short and long. You can see the last time it triggered a short was all the way back over here. It'll never trigger off the high. It'll never trigger off the low. It always has to be a momentum entry. But again, you can see the entries are very, very nice. And the win rate, shockingly, has been close to 80 to 85% on the bonds. And I'm excited to actually, so I've gone back and back tested it. Now I have to forward test it. And then I'll go from paper trade to real money next week. And then I'll work on starting to increase trade size as I move forward. And then I'll be combining that with where my biggest deltas are. And that tends to work very, 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 very well with bonds as well. So again, you can see they're just grinding it up this morning, and that's been very typical. It's Monday. So remember, Mondays and Fridays are the narrowest range days of the week on ES, right? So let me fix this. So if you're trading, expect it to be slow on Mondays and Fridays. If you get a nice surprise and it's something different than that, no big deal, right? That's fine. So anyways, that's my 2 cents, guys. If anyone has any questions, I would call this trend at this point, and the natural target, since we're consolidating above this 2840, is the hole in the profile, right? Squeeze them out. I would expect rejection in this area. So that makes a good target and a good place to scale. I don't know that it makes a great short in this environment. So, and what's going to end up happening is the same story as every other year of the past 8 years. World markets melt, and they're going to go, yeah, the world economy looks in danger, but the U.S. is the only place to put money to work. And by the way, since the S&P has 90% of its inflows are based on long-only strategies and mandates, that's why the market keeps going up, okay? And there's no other market in the world that has as many trillions of dollars flowing into it on a weekly, monthly, and annual basis as the U.S. indices do, and the S&P 500 is the king of them all, besides the bonds, okay? So anyways, that's my 2 cents. Any questions? I know I went on for a long time. I had to catch up from being out for a week, so. Here's your new kingmaker right here to the left, to the right. This is who you have to get underneath. Close underneath, push in, backside test. So you forget about this guy now. This person right here, whoever that is, that's your new kingmaker, right? And you just wait till you get underneath them, and then you hope for a backside test. If you want a short, and you notice that short would line up with ticking right underneath value area high, which is fine. Nothing wrong with that, right? Just realize your stop needs to be about 2 or 3 ticks above this guy. And then you hope that you can make it back to VWAP. And you better have your patience hat on because it could take a while, like all morning. Q's, floor's open. I'm looking right now. Let me see if. $31.25 per tick. Thank you, Mari. Appreciate it. So the way I'll be handling the bonds is once I get the trigger, I'll tell you in the room where I'm taking it. Remember, in bonds this week, it will be paper. Okay, so I'm putting on 3 contracts so I can get 3 scales, right? That's the objective. And the goal is, usually the risk is 6 ticks. So the goal is to get 12 ticks for the first scale and then move stops up and hope it works. That's the brilliant, genius strategy there. The hard work's already been done, and that was setting up the algo. So now it's just a matter of, can I sit around and wait patiently enough to get it all done? There's no way in hell I'd short this when the counter rotations aren't even a point. I know when it goes down, it'll probably be a straight rip down for 5 points, but I'm allergic to no rotation. Okay, guys on YouTube, thanks for joining. If you'd like to come visit us in the room, send me an email to tradertough@gmail.com. I'll extend you a 5-day pass. Guys in the room, I am going through still. I have left some visitors and not removed their privileges. So if I block you accidentally, just email me and I'll fix it up. So if you're a visitor and you've been in for more than 5 days and you'd like to join, email me, right? But the pass was for 5 days, and I work on the honor system a lot of time. I don't care. Eventually, I'll get to you one way or the other. Thanks, Joe. I got you. No problem. So, anyways, uh, uh, that's it. I'm glad to be back. It was a great vacation, but I'm looking forward to making a little bit of money. I'm ready to grind out August and then go from there. Anyways, talk to you on the bit, guys. Get mute out. Thank y'all for joining on YouTube. Wow, really? It didn't record the screen. That blows. Sorry about that, guys.